24 hours into a no caffeine purge, which is
Oh,
so,
how's that going?
yesterday was rough.
Yeah.
Headaches for days, but
I
24
did.
hours into a no it'll be a better environment for my body for sure. I slept better last night, which is
Yeah.
so
I've done a few caffeine fasts. It's funny. I didn't drink coffee until I met my wife, and she was a barista and then got me hooked. But we both done like a couple years ago, we went almost 6 months without caffeine, and I felt awesome, like surprisingly. And then I don't know why we got back on coffee, but
it happens. So caffeine itself doesn't actually make you more awake. It just blocks the receptors that tell you you're tired. So you're
yep.
probably just functioning as a zombie. You just don't know it. So I did two things. So I'm doing a longer intermittent fast and I'm cutting back caffeine because I was doing quite a bit of caffeine a day. Dr. Peppers are my downfall for sure. So yesterday, no Dr. Peppers at all. Today will be a longer fast until about 1 or 2 o'clock, and then 6 hour eating window now. So
There you go.
just a retool.
Yep.
I
Yeah,
mean, it's not
that
really a true fast, because I have my AG1 in the morning and there's calories in it, but it's very, very little.
I found that one works really well for me, doing like 18/6 for intermittent. I feel awesome.
Yeah,
Don't
because
eat.
just a reset, man. Just you find yourself if I'm eating like shit, I'm craving shit foods. I'm not sleeping very well. It's time to just reset the gut and a week or so of just intermittent reset things, get back on.
Yep.
Hey Jim, did you ever get your AG1?
Not yet. I just haven't been to Costco even since I messaged you. Man, I've been, you know what I've been going through. My life's been a mess lately.
So, well, good morning, everybody. Good morning, Erica. Good morning, Anthony. Good morning, Fabi. Good morning, Angie. Good morning, Lydia. Good morning, Robin. Good morning, Spamwell.
Good morning.
It's Spamuel.
Spamuel.
I had you on speaker view, and I had this giant bald mug, and then all these little boxes around it. Had to switch to gallery.
Ah, it's kind of scary. I should do the speaker view more because we're on like the YouTube. It makes it way better when it's like speaker, or at least multi-speaker.
Yeah.
So much better than the gallery because you got like one small little talking box, and then you can see everyone else just kind of looking around like the fucking
What
Brady Bunch
are
movies.
we doing?
What are you guys doing? But
Or everybody's AI away screen.
Oh man. This is terrible to admit, but I had these a couple years ago, had these mandatory meetings that I never had to participate in. I just had to be on them. And they weren't fulfilling or necessary for me. It was just more of an attendance thing. And so I recorded a loop of myself doing this. I would sit there, nod, look down, look back up and nod, and just had that loop playing as my video background. And I got away with it for almost a year. And then they're like, Sam, you do the same thing every morning. And then I'm like, oh gosh, they caught me.
so I get to a point where I'd be on meetings and I could sit so incredibly still. They'd be like,
They think it's actually just a picture.
They have that YouTube guy. He had the green screen,
They're
but he'd be
fucking
like riding a
blanket.
bike or
It's
bungee
depressing.
jumping or something.
"What's that?"
You missed that, Jim. You went like almost 30 seconds without blinking. That's pretty good.
No,
I
it gets
saw
because you get
one.
people looking like you'll just stop in the middle of a sentence and be like, "Hey,"
Like, oh, is my internet connection? Hold on. Unplug the modem, plug it back in.
and you're like, "Oh, sorry, guy, bad. I think I got a bad signal, guys. I'll have to check with you guys later." So,
Uh,
man, one of the worst things COVID did for us was Zoom. One of the best things COVID did for us was Zoom. So, I love that we can connect. So let's connect on some wins. It's been 4 days of this week. Today's the fifth day of this week. We are the 26th of September. Holy crap, where did this year go? Let's hear from you. What are your wins or celebrations? Something you're just dang proud of?
Earlier this week, I had some buyers who we were, unfortunately, the husband did not get a VA loan, was not approved for a VA loan. So we found him a solar grant loan.
There you go. Solar
Which,
grant
yeah,
loan.
Yeah,
Those are interesting, aren't they?
they are. I wasn't fully aware of it, but my lender was able to help me out and find it for us. So
Get solar on the
awesome.
house, use the credit as your down payment, and
Yeah, yeah, I thought that was super cool because they were really bummed that they weren't going to get the VA loan. And we are submitting offer this morning, so excited about that.
there we go. Love that. Fingers crossed the offer gets accepted for you, my friend.
Thank you, thank you.
Fingers, toes, and everything knows, right? What else you got? Don't make me have another day like yesterday. We're gonna pull everything out of you.
Okay, all right. I got two. I got a personal and a professional. The professional one is I was able to bring this phenomenal gal onto my team. She just as an independent loan officer, but 30 years experience, really loved in the community, well known, and finally decided she was tired of doing things the hard way, so now she's gonna do things the same way, even harder. So
Oh,
she's super excited. Good
love that.
fit.
What's your name?
Sabrina.
Awesome.
Yeah, she's awesome. Personal win. So my son's baseball team that I'm an assistant coach on, last season was his first year, and they were like 1-9. It was honestly just it was a great season for him because he learned a bunch, but their team was terrible. And this year we are on our fourth game in a row streak. We've lost two. We're about to go play the teams we just lost our first two games to these coming weeks. But these kids have gone from like decent, like little sandlot players to where they are making double plays. Like they are looking really good. So I'm just super excited, proud of them, proud of my son and his growth. So that's been a huge personal win for me.
That's awesome. We want personal wins too, guys, not just professional. Because when you win the personal, you win the professional.
How old's your son?
He is 10, so turned 10 in July.
I love that every dad that you ask that question to will have to take it.
Yeah.
Look at Jim. Look at Jim's new picture. Jim's in a boardroom.
Dude, this is terrible.
Oh, I love it. AI, man. AI and the profile pictures.
No, God. Yesterday I was messing with Steve Lemons, our other lender buddy, and he sent me his headshot for something, and I took it and put him into a tie-dye muscle shirt, and it looks like the same picture. It genuinely looks like that's Steve taking a picture in a freaking tie-dye muscle shirt.
So too good.
This is not good.
They're like surprisingly good now. They used to really always mess up hands. Like hands were always wrong. Yeah, look at that. That looks like an actual picture.
The actual picture.
That is too funny.
And then I turned it to just a pastel shirt. And then I'm like, let's see how far we can take it. I can tell you, he does not have sleeves like that. Sam does. Sam's all tatted out.
Yeah.
Dan, that looks almost exactly like someone I dated. Looked like he was straight out of prison.
That's hilarious.
Hey, I didn't mean to trigger you. Why are you on the call? You're in Cancun.
I was just gonna say, aren't you in Cabo or some shit?
I'm in Cancun. What do you think I'm doing, man? I'm working on things. I just
I love it.
office with a different view.
Share it.
Oh, okay.
No,
Stand by. Hold on.
I can't right now. She's like, I don't have my eyebrows on.
No, I got my eyebrows on. They had to bring breakfast in this morning. I had to put eyebrows on. Hold on.
All right. While the rest of you get logged in, that's the top of Christina's doorway.
What?
We see, like,
I gotta
pool
figure out how to
water.
turn it around. Hold on. How you turn it around?
You on a cruise?
No, hold on. I don't know how to do this. Okay.
There's Christina's floor. Oh, look at that.
Oh,
Dang.
that's cool.
Dang, right on the beach.
Doesn't let me zoom in on mine. Yep.
Good stuff.
I'll go ahead and say it. Must be nice.
Most beautiful. It is, man.
Yeah, well, I worked my freaking ass off for it.
You didn't
So
have to justify a girl as being a smart ass.
yeah, well, that's shocking.
Everyone that deserves to be on this call and that can be on this call consistently knows that I love when people say it must be nice, because my response is it is.
Mhm.
Yes, exactly.
When someone wants to throw it in your face like, oh, it must be nice, it is. You
Send
know
us a
what?
picture of the pool when you
You
get there.
too could have all these things. All you have to do is
I
put
will.
9 deals in escrow in 3 months or 2.5 months, not even that. So there is opportunity for you to be on a Zoom call with a bald man in Tucson while you're in Cancun too. All you have to do is work harder. Or like Sam said, work even harder. The Sam way.
Daniel.
Sam, what do you hear in the market this week? What's going crazy? What's not?
Yeah, so a lot of things, a lot of good things, but so obviously with the Fed's decision to lower rates, we saw rates spike again. That'll probably last until the end. Like this is probably gonna be the last day we'll see that kind of market volatility. They are like futures are trending down, so we'll continue to see rates decrease towards the end of the year. The good news is though, buyer confidence is up, so we're seeing the mortgage applications increase week over week. So that was kind of something leading up to that decision that we didn't really have data on or didn't see. We saw mortgage applications decreasing week over week, but they are now actually increasing. So that's a good thing. That means people are starting to realize, oh shoot, I should buy a house before things go crazy. And so I would expect that we're all going to have a decently busy fourth quarter. 2025 is going to be gangbusters, in my opinion, but the end of this year, I think it'll be good.
Yeah, I think it's gonna be great.
Did I say 2025?
Yeah, we knew what you meant.
26. Yeah, gosh, man.
We knew what you meant.
I'm still like, is it still COVID? Is COVID still going on?
No.
I really hate when people still reference that. They're like, well, the pandemic. I'm like, that was 5 years ago,
5 years ago.
sir.
Well, here's the thing. Why are home sales trailing downwards if rates are starting to go up, to a more, not up, but down to a more pivot point, I guess? What is the main reason buyers are reluctant to move in the market right now? Or maybe two. This is the participatory part of the class.
I think people are still expecting them to go down lower. I just heard
Okay.
one of the realtors and the home tours that on Anthony and Lydia's house. He was like, well, the agent was like, well, rates are going to be at 5% by January. So that's why people are waiting. And I go, oh yeah, you don't say, huh? That sounds sweet. And he goes, hey, I'm just listening to my lender friends. And I'm thinking, you need new friends.
Yeah.
I don't align with that thought process. And yeah, 5% by January would be fantastic. Is it
Like,
realistic?
that's dangerous that he's thinking that. So he's like telling people that.
Oh
That's
yeah, he's
terrifying.
absolutely. That's his perspective, and he's providing that to his clients. That's scary.
If this wasn't public, I'd say let's check his Facebook. There's probably some good stuff on there.
Right.
Yeah, I mean, in the 14 years of doing this, I did this the other day. My median rate that I've seen over that lifespan is 5.75. And that's me going through the pandemic 2020 and 2021 where we had 2% interest rates. I locked someone at 1.875 at one point. They put some money towards the interest rate, but the point is like for our economy, kind of where we've been at for the past like 30 years, mid to high fives is the most ideal rate range for us when you look at like recession or not recession, we look at inflation and our overall GDP. So for us to be in the sixes and have the high fives attainable, we're right where we should be. That's that's kind of where interest rates, where borrowing money should be at. I think where things get a little messy is during this 2 year period of 20 and 21, we saw home prices increase faster and further than they probably should have. And so we're seeing the market naturally sort of correct that. And people are, freaking out. So like, oh man, home prices are decreasing. No, they're not. They're kind of normalizing, right? You have to look at a 5 year window to kind of see what the market's actually doing. It moves a lot quicker and a lot slower at the same time than most of us really anticipate.
One of the things that we can talk about with our buyers is affordability. Because it all comes down to it's the sales price, it's the interest rate, all boils down to what's my payment. Affordability right now is the most controversial topic for buyers and sellers. So when we're looking at deals like, oh, we want the rates to come down. Why? Well, we want more affordability. Well, we want prices to come down. Why? Because we want more affordability. We want income to come up. Why? Because we want more affordability. We look at these things and these become factors of why buyers and sellers buy and sell. It's the affordability, right? If I can afford it, it makes a good sense. A lot of people don't have the mindset around that a $1,400 mortgage no longer exists. That same $1,400 mortgage is now $2,200.
In the same token,
Yeah.
$600 truck payment no longer exists. It's now $1,200. So
Yeah.
when you look at like our overall economy, we are a spending economy. Like we function off of spending. So when certain markets retract, others expand. And what we've seen in the last couple of years, meaning like the last decade, is we've seen smaller tier purchases increase and higher tier purchases decrease. So people are spending more money on their credit cards, on autos, things of that sort, and less on their house. So it is something. Affordability is a much bigger conversation because it's not just housing. It's, hey, do you actually need to have the brand new truck, or can you find something that is going to serve the same purpose and be able to buy it cash? And I'm all about, driving a nice truck, but it is something that I think that the more that we can have conversations around that and like not be minimalist, but not as consumer centric, I think that we can help people realize their dreams. Because yeah, buying a house is such a game changer. It's a 400% net worth increase over somebody rents, just owning a home.
Yeah. You get so much more out of it. But here's the thing. What are the 3 innate human needs? Food,
Shelter.
clothing, shelter. In that order. There's a 4th one that we don't talk about. It's transportation. Now in the globalized community that we are, we need transportation. But Sam's right. The average car payment is doubled. The average home price it's gone up 34%. Interest rates are gone up. They've more than doubled. Now they've doubled. But we look at all these things compared. Hey, it is on us to help our buyers understand the affordability and find ways of making it work if their lifestyle demands a move. People aren't doing this because they want to. They're doing it because they have to. So let's find the people that have to and talk them through it. Hey, you know what? If you did this, we could do this. And that's why it's important to have good partners like Sam, where we could look at the entire profile and say, okay, well, why don't we wrap in your credit card payments with your mortgage, pay those off, get rid of the credit cards afterwards. That way you're saving that extra $400 or $500 a month in payments, and you can go up on your house payment $300, and it saves you money over time. Or you owe $9,000 left on your truck. Let's do it. You've got a VA loan. Let's get the seller to pay that off. That saves you $600 a month. Now you can afford the house that you want. Don't go out there and buy another truck. Save up some money and pay cash for the next one. I don't want people to be house broke, but I want people to realize home ownership. Because like Sam, it is an exponential growth in your overall net worth. Plus, the advantages of home ownership far outweigh renting if it's a long-term stay. Christina, you got a question?
Yeah, I raised my hand. Isn't that weird?
I don't
Love
like
it.
I felt very uncomfortable. But I would like you all to be proud of me for exercising that much self-control.
Very proud.
So here's a question. And Sam, hopefully, you'll definitely be able to answer this. So we talk a lot about in the vein of affordability, we talk about how some people are like, well, the rate's this, but get in when you can get in and then refinance when that's an option. Something that I was just chatting with someone about and I'm curious about is how PMI might factor into this. So if somebody doesn't put down 20% unless they're VA, then they've got PMI. Is there a minimum period of time that they need to hold the loan before they can do a reassessment to see if they can have that taken off?
Yep. So FHA is 210 days. You have to go FHA to conventional. Conventional is 2 years. So as long as they have their home for 2 years, we can remove the PMI. And generally speaking, I don't want to say generally speaking, in some cases, even if they put the minimum 3% down in that 2-year period, they will have gained enough equity to be able to remove the PMI or pay the remaining balance at closing. So there's ways, even on a purchase, where you can pay a prorated upfront PMI and not have that into your monthly payment. You can even do that on a purchase. Yep. Yeah. So in some cases, if we have a seller credit or there was a case where the appraisal came in a little bit higher what the purchase price was, we can increase that seller credit and have that go towards an upfront PMI and not have that be part of their monthly payment.
Dude, I've never heard that before. Okay, that wasn't even where my brain was going. That's a game changer because
Yeah.
we were going to offer a credit. I had some sellers we just closed the other day, and we negotiated for some credit in lieu of repairs, and we issued it like I wrote the addendum to state that it was a credit, and the agent called me. He's like, "Hey, why are you doing it as a credit and not just a price reduction?" And I said, "Well, I figured they would want to, keep some money in their pocket, or that might go toward their down payment or something." He's like, "No, they want the price reduction." And I was like, "Okay, I guess, yeah, sure." I mean, if that's, and obviously then we talked to the sellers and we worked it out that way, but um I had no idea. That's fantastic.
Yeah, it can be a real powerful. There's so many different ways to skin a cat, so to speak, but that's one where we've been able to save a lot of deals just by looking at a single upfront instead of a monthly.
Now,
So
does that work into their maximum allowable like seller concession percent?
it does, yep. Yeah, but
Okay.
you still have to follow interested party contribution rules. But if it's the difference of like 2 or 3% in DTI, that can mean getting the house or not getting the house.
And most lenders, is it automatic that they will drop PMI off once the loan to value hits the right percent, or?
Yeah, there's a bit of misinformation about that. So let me diffuse it, or yeah. The way that works is your PMI dropping off is set on your original amortization table. So an original amortization table, when you hit that 20%, which is usually like 7.5 years into your mortgage, is when that PMI will come off. Obviously, we know that just based on the market, that will happen a lot sooner, just with the equity increasing in your home and the value increasing. But the PMI will be removed from your mortgage automatically when you hit that specific date and payment in your amortization table.
So I just had that with my mom. And then I just put a comment on Facebook to someone about this because she's, looking at maybe needing to sell her house. Like she's just in a tough spot. And so, do I rent it? Do I sell it? So we're sort of looking at the affordability of it from every angle. She's in a totally different state. So obviously I can't get real specific with her other than to connect her with people out there. But that was one thing. She said something, and I said, "Oh, do you have PMI on your house?" And she said, "Yeah." And I was like, "Well, how long did you buy that? How long ago?" She was like, 5 years. I said, "Mom, you should talk to the lender. You might be able to get that taken off of there." And so, sure enough, she did. And she had just gotten an appraisal because she wanted to she's got 9 acres. Maybe I'll, take part of it off. We'll section it and then we'll do it this way. And she was able to use that. And then the appraisal is what, Sam, like 650, something like
Yeah,
that?
depending on the size and complexity of the property, but yeah, I'd say
I mean,
650.
yeah, get that. If you can drop PMI from your mortgage sooner than you like, I bet you so many people don't even think about that. It's part of the loan, and then they don't even consider it again until, like you said, the like default date years in the future, maybe that rolls around and they go, "Oh shit, I totally forgot about that."
Yeah. Yeah, there's a couple things that people don't really think about or talk about. One of them specifically is if you have clients that purchase a house and they had like marginal credit at the time, and they're now a few years into it and their credit profile has drastically improved, have them reevaluate their homeowners insurance, because chances are they're going to save, a couple bucks right there. Homeowners insurance is, based on a lot of factors, but credit score is one of them. And as your credit score increases, your policy won't change unless you manually have them, pull new numbers for it. So always be looking at that stuff as well.
Can I ask a question about that?
No.
Yeah. No, I guess not.
No. I love how you're so honest. So I want to understand more about how you were saying that you could do something in the purchase offer that allows you to finagle something with the PMI so you don't have to do that. Like, what were you saying about that? I want to understand that better. Like, to remove PMI, you can use some money from somewhere and then apply it to that. Can you explain that better?
Yeah, so the way mortgage insurance works, this is only for conventional. So I want to state that first. FHA, you have mortgage insurance on the life of the loan. The only time it varies on FHA is if you put more than 5% down, it changes the monthly factors and it also gives it an expiration date. If you're putting the minimum 3.5% down, it's stuck for 30 years, same factors. on conventional, you have three different options for your mortgage insurance. You have monthly, which I found monthly, split, and then upfront. Monthly means you pay a monthly payment every single month until you reach that natural amortization and it drops off. Split means you pay a portion of it upfront and it drastically decreases that monthly, but you still pay that monthly until it naturally drops off. And then upfront means you're paying the entire amount upfront. Generally speaking, though, it is prorated. So you pay a lower amount at closing than you would if you were to carry that for the life of the loan.
What's the percent on that, Sam? Is that like if someone did have an extra chunk of credits from the seller and they wanted to pay it to that, how would they know how much that's going to cost them?
Yeah, so because it's insurance, it varies. We have to pull a quote on each one. So I've seen them range from like 1.5% to like 4%. It really depends on the overall credit profile, how much they're putting down, things of that sort. The biggest factors for that cost is number one, LTV. So, putting down 3% versus 15% is going to have a drastic difference on that amount. And then also credit score and multiple borrowers. So generally speaking, a single borrower with a just marginal credit score and lower loan to value or lower down payment is going to have the higher upfront, where multiple borrowers, higher credit score and more down payment would have a lower upfront.
And so they can pay a portion of, it's not like an all or nothing thing. Like if they wanted to kind of like a buy down, they could put,
Correct.
I've got an extra 10 grand or something that the seller we've negotiated, and we're going to put this toward PMI, and then they would just prorate the difference over the rest of it.
Somewhat, yeah. It still follows percentage factors. So they do like, 0.25, 0.5, 0.75, 0.1% of the loan amount, but they can put any one of those increments down and decrease their monthly MI.
And so if they have an FHA loan and they've had it, let's say, for 5 years, and they want to look at trying to drop something like that off, if their home value is increased, they would have to convert it to a conventional loan, you're saying?
Correct. Yep.
Are there other fees associated? I mean, like, is it kind of like 6 of one, half a dozen of another, that if they're converting their loan type, yeah, they're going to save PMI, but they're going to be paying something else?
It really well, no. So if we're converting it to conventional and they have the equity, they wouldn't be paying anything else. The 6 at one half does the other really comes down to just what their loan looks like versus what the proposed is. So like if the rate is increased on the new loan, maybe it doesn't make as much sense. If the rate is obviously decreased, then it does make sense. There's always going to be costs to a refinance, but generally speaking, a lot of those can be substantially lower for something simple like that. The one thing that I think is important with stuff like this is, whenever you're like a mortgage should not be like a set and forget sort of thing, because your life, different factors, environment, things like that will change. And it's important to always kind of stay ahead of that and be in communication with your lender. Because there's a lot of things that, like I pride myself being super proactive with my past clients, where if I know that there's savings, I'll reach out to them proactively and say, hey, this just happened. Now we can do this. This is going to save you X, right? But if for your clients and would-be homeowners, just making sure that is a relationship they continue and that communication line stays open, because there's always ways you can save money down the road with your mortgage.
But a lot of loan or banks will sell them to a different loan servicer, right? Would you still then, I guess, keep in touch, because you might bring them back into the fold if there's something that makes sense?
Yeah, so every mortgage since 2008 has MERS, which is basically it's Mortgage Electronic Registry System, which is basically a social security number for your mortgage. So once it's been recorded, like the note has been recorded with the county, that mortgage cannot change because it follows that specific MERS number. And that's what I go off of. I pull that up and I can get all the data off of your original, or not original, but the current note. And know what the mortgage is going to do. Nothing like they can sell it to 50 different servicers, and that will not change unless they do a refinance and change that MERS number.
Huh. That's interesting.
They did that.
Yeah, go ahead.
They fun fact, a bit of trivia about this, but they started using MERS because there was a company called Washington Mutual. I don't know if they're even based out of Washington. There's a few branches in Washington. This is pre-2008 era. And Washington Mutual was changing people's loan types without telling them. and collecting a whole bunch of extra fees and going from like a fixed rate to an ARM and all sorts of crazy stuff. So the federal government came in and said, hey, you know what? That's enough of that shenanigans. Everyone's getting basically a social security number for their mortgage and nothing changes. That's all put into a national registry, and that cannot change without doing an active refinance.
Crazy.
So really quick, just to retouch on what you were saying, that PMI is, you were talking about for a conventional loan specifically, because I understand that a FHA loan, you know, until you refi and go conventional, you don't get rid of the PMI until you own 20%. But you were saying that with a conventional loan, you can still have PMI.
Correct.
And then, but there's a way to ask for money back and pay that. So would we just write that in, I guess, in the offer for escrow, so that way they know where to put the funds? And then how does that affect your payments? Because that's what I want to understand too, is, you know, could you give me like a really quick scenario of like what that looks like and how that would affect someone's payments? Like if you were to get 10,000 back, and I don't know what the payments would be, but.
Sure. So yeah, so let's look at a scenario. Client is buying a $300,000 house. They're putting 3% down, and they have enough to cover their home closing costs, but they're getting a 2% credit, and the mortgage insurance monthly is going to be $133 a month, or 2% at closing. So 2% being the upfront fee. If they were to take that 2% credit, apply that towards upfront mortgage insurance buyout, their payment would decrease by that $133 a month.
Okay, that
That's
makes
like
a lot.
game changer. That's
Yeah, that
crazy.
makes a lot of sense.
Here's the cool thing, and this one is, I can only speak to me, specific to me, but lenders can do this. But anytime I have an upfront MI situation where a client is using money to buy their mortgage insurance out, I structure it in a way where I show a charge for that and then a credit. What that does is it allows them to write that entire amount off as a lender charge on their taxes. And so you know, mortgage insurance we can't write off on our taxes, but if you do it upfront, then I can show that on your CD or closing disclosure, and they can write that entire amount off on their taxes.
Dude, that's sick.
That's another, yeah, because otherwise they're just writing off what, property taxes.
Don't
That's
share my secrets, but yeah,
insane.
yeah.
That's awesome.
May or may not
Thank
be
you.
on YouTube.
Oh, doggone it. All right, world. Here we go.
I mean, we got deleted. I don't care. You tell them Dan.
Yeah, we can edit that one.
It's not illegal by any means. It's just I like doing that because that's definitely a differentiating factor. A lot of people overlook that, and you know, I having to pay taxes personally, I loathe paying taxes, so I always try to find ways to legally not pay taxes if I can. So that is one way.
Agreed.
So you're
Okay.
saying any mortgage, God, what's it called? What all can they deduct? Because you're saying loan interest charges?
So basically, any origination charges. So box A on their CD, they can write that off. So like if I charge origination, they can write that off. If they're going to pay, you know, do a buy down, it's called bona fide. Bona fide, technically they can write a portion of that off, but I can take that bona fide. Let's say they wanted to pay 2% towards their interest rate. So instead of putting it in box B, bona fide, if I put that in box A, origination, it's the same charge for me. I'm just moving it up one box. They can now write that entire amount off instead of only a portion down here. So same thing with mortgage insurance.
Even if it was paid by the seller?
Right, because I can increase my charges on my end to negate that.
It doesn't matter if it's paid for by the seller or not because it's not a tax benefit to the buyer.
Correct.
Oh, it's a tax benefit to the seller.
It's more on the lending side that you have to sort of manipulate it. But I can like make that a wash and a charge at the same time. That the charge is what they're looking for on the CD.
Long story short, don't worry about the semantics of it. Just work with Sam and he'll figure it out.
Samuel, yep.
All right. Anyone who doesn't have Sam's phone number, you suck. You need to have it. I'll put it in the chat for you. I'll give you 30 seconds to pull it down, but I got to end this call to start the next one.
Or Sam could just put it on his name like I did.
Oh,
Yeah.
Jim, I'm doing that next week.
520 not so. Spamuel is 206-853-4447. Spamuel, thank you so much for your knowledge, your expertise, and your great conversations today, guys. I hope you know you're getting nuggets of gold that you can go out there and put into play to get yourself more affordability, to get more clients, to get more deals, to make more money, so you can go to Cancun like Christina.
Dude, I was gonna say this is gold conversation today, Sam.
Good.
Every
Good.
time. Well invested, sir. We love it. We love you.